Imagine you're arguing with someone, and halfway through the conversation, you realize that they're right. You know it, they know it, and deep down, you know you lost the argument. But instead of admitting it, you keep on talking. You bring up unrelated points, you search for tiny details like anything to avoid saying three simple words. I was wrong. Why? Because being wrong feels so uncomfortable, not just intellectually, like emotionally as well. And psychologists have spent decades trying to study this behavior. They've discovered something fascinating. Human beings don't simply hold beliefs, and we often become attached to them. Our opinions stop being ideas and quietly become part of our identity. You see, when somebody challenges those ideas, it can feel as though they're challenging us. And this may be one of the biggest reasons why traders struggle to become consistently profitable. Because the market doesn't care whether you're right, but your ego does. So, look, think about when you were back in school, right? You were rewarded for being correct, and correct answers earn better grades. Makes sense. And high grades earn praises, and being wrong meant mistakes, failure, embarrassment. And for most of our lives, we've been conditioned to believe that being right is valuable. Then we all discover trading. And without realizing it, we bring the same mindset into the markets, right? Like every trade becomes the question, was I right? Instead of asking, did I follow my process? And we ask, did I win? You see, the subtle difference changes everything. And imagine two traders here. The first one follows every rule in their trading plan. Perfect execution, perfect risk management, but the trade still loses. And the second trader ignores every single rule, enters impulsively, and moves the stop loss, adds to a losing position, and by pure luck, the trade wins. Let me ask you a question. Who do you think traded better? And most people immediately look at the outcome, the P&L. But trading doesn't work that way, especially if you want to win in the long run. You see, good decisions sometimes lose, and bad decisions sometimes win. You see, the market is not grading your intelligence, it's simply expressing probability. Yet our brain continued judging ourselves based entirely on trading outcomes. Look, your ego wants certainty. It wants clear answers. Am I right? They're wrong. This trade will work. In reality, it's rarely that simple. Markets are built on uncertainty, and there's no trader, regardless of experience. I'm telling you, there's no trader that knows exactly what will happen. Yet, so many traders secretly crave certainty, not because certainty exists, but because uncertainty makes the ego uncomfortable. The ego doesn't go saying, oh, I don't know, but the professional traders become comfortable saying exactly that. And you know what? To win with trading and to be successful in the long run, like you don't need to know everything. Look, listen, have you ever noticed how difficult it is to close a losing trade? Like sometimes the stop loss is only a few points away, right? And you know exactly what your trading plan says. Like still, you hesitate, you move your stop loss, maybe you average down, and maybe you tell yourself, you know what, maybe it'll come back. I really want to see. Why? Often it isn't about the money. You see, closing the trade means admitting that I was wrong, right? And for so many traders, that feels so much more painful than the actual loss itself. So they stay in the trade. Not because the trade deserves more time, but because the ego does. And ironically, winning creates the same problem. After several successful trades, a danger thought appears. Man, I'm really getting good at this. And maybe you tell yourself, bro, I figured out the market. I found my escape. You see, the market has not changed, and probability has not changed either. Only your confidence does. Now, you begin trusting your instincts more than your rules, right? You ignore your checklists. You start to increase your position size because you believe that your decisions can can outsmart the market. But the strange thing is that same ego that refused to admit losing also loves taking credit for winning. And both behaviors lead to the same destinations: poor trading decisions. So imagine introducing yourself. Like, who are you? Many traders eventually begin saying things like, "Oh, I'm a profitable trader," or maybe another one would say, "I'm a losing trader." Notice what happened here. Trading became part of their identity. And that's so dangerous because once your identity depends on the trading outcome, every winning day will inflate your confidence and every losing day damages your self worth. Professional traders don't build identities around their results, they build identities around behavior. Instead of saying, "I'm successful because I win," they say, "I'm successful because I consistently follow my process." And that's something that the market cannot take away. Look, humility often gets mistaken for weakness, right? But in reality, it's one of the greatest, strongest competitive advantages a trader can develop. Humility allows you to change your mind, to exit losing trades, and to admit when your analysis no longer fits reality. Ego says, defend your position. Humility says, protect your capital. Those two are completely different priorities. One serves your emotion and the other serves your trading future. Now, imagine approaching every trading session with one question, right? What is the market trying to tell me today? Instead of, "I'm going to prove my analysis is right." You see the difference? One mindset is curious and the other mindset is defensive. The curious traders, they adapt. And defensive traders, they argue. And unfortunately, the market never loses arguments. It does what he wants. Look, many traders secretly seek validations, from profits, from social media, from posting charts, and from predicting tops and the bottoms. And honestly, there's nothing wrong with sharing ideas. The problem begins when validations become the goal. Professional traders, they aren't trying to impress anybody. They're trying to survive because surviving long enough is what eventually creates consistency. Look, the market does not pay you for being impressive, right? Honestly, it pays you for being disciplined, making disciplined decisions over and over and over again. So the next time you close a losing trade, seriously, pay attention to your thoughts. Do you immediately think, "I can't believe I was wrong," or do you think, "Hey, I followed my plan. That was a trade outcome. There's nothing I could do about it"? You see, those two internal conversations lead to completely different futures. One of them damages confidence, and the other strengthens discipline. The outcome did not change, only the meaning you attached to it. Imagine owning a restaurant, right? One customer walks in, they order a meal, then leaves unhappy. Would you close your business? Of course not. You understand, one customer does not define a restaurant. And trading works the same way. One trade does not define your strategy, and one losing day does not define your ability. Professional traders, they think like business owners. They're not gamblers. Business measure success over months and years, not individual transactions. You see, trading deserve the same perspective. So here's the conclusion. The market does not reward traders for being right. It rewards them for managing risk, for following a process, for staying objective. Our egos naturally want certainty. Yes, the validation, recognition, but markets offer none of those things. They only offer probabilities. And the traders who survive aren't the ones who can predict every move. They're the ones who become emotionally comfortable with what? With being wrong. Because being wrong is not failure. It's just refusing to accept it. And often every stop loss is simply just information. And every losing trade is simply just one outcome inside a much, much larger sample. And the moment you stop treating trading as a test of intelligence, it's often the moment you will begin improving. Because trading was never about proving yourself right. It was always about making good decisions again and again, day in and day out. So, look, the next time you take a loss, don't ask, was I wrong? Ask instead, did I honor my process? Because your process and not your predictions will define whether you will succeed in trading or not. The market does not need you to be right, it only asks one thing: can you remain disciplined even when you're wrong? And if the answer is yes, you're already thinking like the traders to survive and become successful in the future. Look, master your mind, master your market. This is NQ State of Mind. If you like this video in any way, shape, or form, please like, comment, and subscribe. I promise you I will respond to you. All right, you guys have a trading day. We'll see you later.